Intel returning to profitability after 2 straight quarters of losses, also issuing a strong forecast. Jon Fortt spoke to CEO Pat Gelsinger in the first interview after the company reported.
It's a very good quarter, beating on top, beating on bottom line, raising guidance for next quarter. So just overall, you just say good quarter on financial discipline, market. We exceeded across multiple lines of business, but in particular was the client business where we saw the strongest beat.
All right, joining us for a deeper analysis, Vivek Arya, Bank of America Global Research Senior Semiconductors Analyst. Should I buy it? I'm not going to buy it, but should people buy this stock here? It's been tough for a number of years, Vivek. I don't know whether you'd say the company lost its way, but it's not quite down 50% from recent highs, but almost. And NVIDIA is $1 trillion company. AMD has eclipsed Intel's market cap. Qualcomm almost. Is this the time to step back in? Is it on track? Gelsinger got things going now?
Sure. So, Joe, let's start by giving Intel credit for executing on their cost reduction plan. I think they have done that quite well. They are executing on a manufacturing roadmap that's in progress. And they are, getting help from a PC business that is stabilizing at its lows. So I think those are all the good things. The challenge I think Intel still faces is that it's harder to now grow the business because the portfolio is just not aligned with parts of the semiconductor market that are growing. So, for example, let's take a traditional server where Intel is very dominant. So a traditional server sells for $10,000 and Intel sells about 20% of it. But when we go to an AI server, Intel's contribution drops to low single-digit percent. And that's where NVIDIA's contribution gets to almost 60-70% of the price of the server. So that's our main concern. And the reason we are cautious is because Intel's portfolio is too much geared towards PCs, which is not a growing market, and is not geared enough towards the AI business, where their pipeline of less than $1 billion pales in comparison to NVIDIA, which will do probably over $30 billion. This year. So we still don't think that this is the time to take another look at Intel stock. But they have stabilized the business at these levels. Growing it, I think, will prove to be far more difficult.
Yeah, years ago, the decision would have had to have been made to pivot from PCs. Vivek, was that the... Someone always seems to eclipse old tech, more nimble, new companies. Was Intel, you wouldn't say they were asleep at the switch necessarily, would you, Vivek? But they certainly didn't anticipate the markets they should have been focusing on as well as they could have. Is that fair to say?
Right. I think it's, they have faced a number of challenges. And the issue is that they are trying to tackle multiple problems at the same time. So if you look at their manufacturing and design, it's integrated within one company. But their competition is of companies that are either doing manufacturing, so they're either focused on the manufacturing side, or they're focused on the design side. So manufacturing side is Taiwan Semiconductor. The design side are people like NVIDIA, like AMD, like Broadcom, like Marvell. And that focus is helping those companies execute much faster. And I think that's the challenge Intel faces, that they're trying to tackle two problems at the same time. And that, I think, is sub-optimizing the model. And then the second issue is when it comes to this very brand new market of generative AI, this is not a chip market. You have to simultaneously optimize hardware, software, silicon. You have to essentially think of the data center as an all-in integrated mechanism. And that's just not Intel's expertise right now, because they're at their heart, they are really more of a chip company. And that is something that I think NVIDIA has executed on extremely well by coming together with a very holistic integrated approach of system, silicon, software, switching expertise. And that's why we think it's going to take Intel time to catch up.
Is the PC, what's the future of a company that is focused primarily on the PC and is, its fortunes are sort of tied to PC sales? It's better than it was. It's coming back. Obviously, it's going to be tough to match the pandemic years for PC makers. But what does a stable PC market do for Intel? Where should the stock be if it comes back to? Does it ever come back to a growth?
Yeah, look, half the business is a PC market, and definitely our usage of PCs post-COVID has increased. But so has the quality of these PCs. I'm using my iPhone a lot more than I used to, but the quality of the iPhone is much better. So the replacement cycles have stretched out. So the quality of these electronics continues to improve. But with PCs, it's a replacement market. We think it's about anywhere between either side of 250 to 60 million units a year. And the other nuance about the PC market is pre-COVID, Intel and AMD, so essentially x86, used to be 100% of that PC market. But once Apple started to design their own processors, about 10 or 15% of even that market that was not growing has moved to Apple and outside of Intel and AMD. So even when the PC market recovers and gets back to this normalized position, we think Intel will actually be making fewer PC processors. So depending on just the PC market to drive growth, I don't think will be fruitful. It does help to fill a fab. So that's a good thing. It helps to drive margins. It helps to provide funding to invest in other areas. But I don't think we can count on the PC market to provide the growth. The growth has to surely come from the data center. And I think that's where the competitive environment is likely to get tougher over time.
So you didn't change your rating or your price target, Vivek, on Intel?
No, I think they are, as I mentioned, they absolutely deserve credit for stabilizing the cost structure. Okay. They did execute on the margin side, but the growth side is still where we remain cautious.